Why does your bank account look like you're broke? I get this question all the time from freelancers and small business owners. You check your profit and loss, it says you made $8,400. You check your bank account, and there's $1,587 in it. You start panicking. Did you mess something up? Did your bookkeeper make a mistake? Nope. Both numbers are right. They're just answering two completely different questions. And by the end of this video, you're going to understand exactly where that gap comes from, and more importantly, how to stop it from blindsiding you. I'm Vani, CPA, and this is the conversation I have with clients every single week. Let's start with the basics. Profit measures how much your business earned after deductible expenses. Your bank balance reflects every single dollar moving in and out of your account, including things your profit number was never designed to capture, like taxes, owner withdrawals, and personal spending. If your cash basis, which most freelancers, sole proprietors, and small LLCs are, you'd think this would be simple. You count income when the money hits your account. You count expenses when the money leaves. No accruals, no deferred revenue, no complicated matching rules. But here's the catch. Even on cash basis, your taxable profit and your actual bank balance are still two different numbers, and mixing them up is one of the most common reasons self-employed people get blindsided at tax time or feel cash poor in what should have been a great year. Let me walk you through a scenario that probably sounds familiar. Meet Jamie. Jamie's a self-employed graphic designer filing a Schedule C cash basis. Jamie's profit and loss statement says $8,400 in profit this month. Jamie's bank account says $1,587. Neither number is wrong. They're just telling you different things. So, where did the other $6,800 go? That's what we're about to break down. This is the big one nobody sees coming. When you're self-employed, you're paying both halves of Social Security and Medicare, the employer portion and the employee portion. That's 15.3% of your net profit. And this isn't a business expense that lowers your profit number. It's a tax that sits on top of it. On that $8,400 in profit, that's over $1,200 gone before you even calculate income tax. If you're new to self-employment, you often don't find out this tax exists until your first tax bill shows up. When you had a W-2 job, taxes came out of every paycheck automatically. You never even saw that money. As a self-employed person, nobody's doing that for you. You're responsible for setting aside your own income tax and paying it quarterly. If you don't, that money just sits in your account looking spendable until April, when you find out it very much wasn't yours. Your rent, groceries, car payment, utilities, all of that comes out of your bank account, but on cash basis, none of it is a business deduction. Your profit calculation completely ignores it. Your wallet does not. This right here is probably the number one reason sole proprietors feel broke during a profitable month. Say you spend $2,400 in January on new equipment for the year. On cash basis, you might deduct some or all of that right away, or spread it out over years through depreciation. Either way, the cash already left your account in January. The deduction and the cash leaving don't always move in sync. Health insurance? If you're self-employed, your premiums are deductible, but not as a business expense. It's an adjustment on your 1040. The cash still leaves your account every month either way. And timing. Get paid December 31st. That's this year's income. Get paid January 2nd. That's next year's. Land a big project that straddles the new year, and you can owe a chunk of tax on money you've already half spent. Quick one most people miss. If you'll owe more than $1,000 in tax this year, the IRS wants quarterly payments, not one lump sum in April. Skip it, and that money sits in your account looking spendable all year. Then April hits, and you owe it all at once, plus a penalty. Most people learn this the hard way exactly once. Here's the fix. You don't need software or a CFO, just 4 habits. 1. Open a separate tax account. Every time money comes in, move 25 to 30% of it there immediately. Don't touch it. 2. Pay quarterly, on time. April 15th, June 16th, September 15th, January 15th. Put them in your calendar right now. 3. Know your take-home, not just your profit. Subtract taxes and living costs from your profit number. What's left is what you can actually spend. 4. Keep business and personal banking separate. One account for everything makes it impossible to tell what's profit and what's just sitting there. Simple way to remember it: 60-30-10. 60% living and operating costs, 30% taxes, 10% buffer. Bottom line, cash basis is simpler than the alternative. But simpler doesn't mean it matches your bank balance. Your bank balance includes taxes, personal spending, and cash movement your profit number was never built to track. The business owners who stay financially healthy aren't the ones earning the most. They're the ones who know where every dollar already went. Drop a comment with your own "wait, where did my money go" moment. And if you want to go through your own numbers, I do free 30-minute consultations. Links below. See you in the next one.